Hello, everyone, and welcome back to AI in the Real World. In the previous episodes of this series, we explored how organizations are building, scaling, and operating AI system. But today, we are taking that conversation into one of the most critical real domain, finance, where the stakes are incredibly high. Decisions need to happen in real time, and trust is everything. Theme of today's episode is AI in finance and fraud detection, from anomaly signals to business decisions. Our guest today is Sowjanya Karri, a technology leader working at the intersection of AI, finance, and anomaly detection. As a principal technical engineer at Oracle, Sowjanya brings deep expertise in building AI-driven financial systems that help organizations detect fraud, manage risk, and enable intelligent real-time decision making while balancing accuracy, explainability, and trust. In this conversation with Saujanya, we will explore how AI is transforming fraud detection, why anomaly detection is such a complex challenge, and what it really takes to build a reliable AI system in the financial world. Welcome to podcast, Saujanya. Thank you so much for taking time out today to join us. I'm really excited to have this conversation with you. But before we jump into our questions, why don't you introduce yourself to our audience and give a little bit background of your experience?
Yeah, thank you, Sheetal, for your kind introduction. I'm Sowjanya Karri, and I have around 17 years experience and worked on different platforms like Oracle applications, enterprise performance management, and Oracle Fusion applications. So right now, I'm learning and researching about the AI, the impact in finance, and how to detect the anomalies in the financial data. Yeah.
Okay, perfect. So then, are you ready for
Yes.
question and answer? Cool. So I'm going to start the journey of my questions, but it flows from one topic to another topic organically. Like we'll talk about finance in general, what AI is doing in finance industry, then towards architecture, and then toward the end we will talk about why trust is important, and at the end we'll conclude the overall picture. Okay,
Yeah.
so I want to start with the industry as finance as an industry, right? What is unique about finance industry and why it becomes complex to use AI in finance industry? Because AI in financial services evolved a lot, right? From our traditional based system to now modern AI data driven detection and all the stuff. So give your perspective on this transformation or this evolution in finance industry.
Yeah, sure, Chetan. So AI in finance has evolved from static rule-based systems to dynamic data-driven intelligence. So earlier systems depend on the predefined rules such as flagging transactions above a fixed threshold. But these are useful but brittle because fraudsters could learn and bypass them. But today, machine learning models analyze the patterns across large volumes of data and also customer behavior and detect unusual activity in real time. So the shift has been from rules and then pattern recognition, and now it comes to behavioral understanding and real time decision making. So because the rules were brittle but fraudsters could easily bypass them. So for example, if we have a static rule where flag transactions above $10,000,
Hmm.
fraudsters simply do $9,900 multiple times. And
Hmm.
also, yeah, and also rules don't understand who the user is. So a $5,000 transaction could be normal for one user, but it is suspicious for another. Uh,
Hmm.
yeah, and also fraud evolves so fast, and we need to update the rules. And if we and also if the rules update slowly, it will be affected. And also, these rules are always reactive, and they are not proactive.
Hmm.
So
Hmm.
Machine learning adapts as the patterns change. So, what machine learning is more useful is it learns from the historical data, and it also builds the user profile based on their behavior modeling, which it will take the spending habits and what is the device they are using and location patterns, and it flags the deviations, not just the thresholds like static rules. And
Mm-hmm.
also, machine learning can detect new fraud patterns it has not explicitly seen earlier. And also, it usually works with the sequence of data and the actions instead of just a single transaction.
Mm-hmm.
And but the thing is, for the machine learning, we need continuous improvement, like models retrain with new data and
Mm-hmm.
adapt to evolving fraud tactics. And also, we need to provide the feature richness, for example, time, location, velocity. So we need to provide. So all those features are very important in the machine learning. So, machine learning shifts the detection from static rules to probabilistic pattern recognition and
Mm-hmm.
allows system to adapt as user behavior and fraud tactics evolve. So that's why we are moving from detecting fraud after it happens to preventing it in a real time with very milliseconds model decisions,
Mm-hmm.
and we need to embed it directly into our transaction flows. Because these static thresholds were very easy to reverse engineer, and fraudsters could simply stay just below limits, and or they can split the transactions.
Mm-hmm.
So, but machine learning improved by modeling user behavior and detecting the deviations. So now the industry is moving towards these real-time decision systems where models code transactions in milliseconds during the transaction itself, and also it enables the immediate actions like blocking or step-up authentication, which shifts from detection to prevention.
Okay. Yeah, thank you for the detailed answer. But the way you are explaining is it looks very simple, like from the rule base we are going into it, but it looks very complex. Like it's not like just
Yeah.
moving from version 1 to version 2. It has a lot of logical processes need to be defined before we make this. Like the example you mentioned, that 10,000 is your limit for detecting the fraud as a rule. But when you are adding this AI into it, you are adding like location, who is doing at what point of time in a day, from which location, and for what purpose, right? All those nuances now gather together, review together, and then the decision is made whether it's a legit transaction or a fraud transaction. So that's the shift I can see from your
Yeah.
answer. Okay. Uh, is it um, is it very complex to define those rules? I mean, if you can give more example, like a real life example, if like the I tried to put it into simple words, but do you want to go in more technical details? How do we define these rules to identify these frauds based on your
Yeah.
experience?
So fraud detection is very hard because it's an adversarial problem, and also fraudsters are constantly evolving, and the main problem is the data is highly imbalanced. So fraud cases are very rare, but critical.
Mm,
So what looks like an anomaly is not always fraud. It could just be a change in user behavior also. So,
mm. That's a
uh,
good point.
yeah, so fraud is a tiny fraction of all the transactions, maybe around often one less than 1%,
Mm,
but it has a cost per very high cost per event. So
mhm,
a model which get 99% accuracy by predicting no fraud always is a useless model, because we have very few fraud examples to learn from, and also sometimes accuracy also mislead us.
Mhm.
So, for example, if we catch more fraud, uh,
Mhm.
it will be leads to risk more false alarms also. And if
Mhm.
we reduce the false alarms, it will miss the fraud. So out of 1 million transactions, maybe only 1,000 are fraud, like a needle in a haystack. So that's why we are optimizing for extremely rare but high impact events, which make learning and evaluating and tuning much more challenging than typical machine learning problems.
Okay.
And also, the patterns are drifting over time. So, both user behavior and fraud tactics change continuously. And what counts as fraud today may not look the same tomorrow.
Mhm.
And also, users travel, change their spending habits, and
I was
yeah, and
I was
adopt.
about to say that, like, sorry
Yeah.
to interrupt, but like when you said that not everything which looks abnormal is fraud, I like first thing came in my mind probably holiday season. We
Yeah.
tend to spend more than what you visually spend, right? Because
Yeah.
you may it be Christmas or sale season or Diwali for
Yeah.
us, right? So,
Correct.
yeah, that even though we spend high, that's not a fraud. So then, how? I mean, you touch upon it, but yeah, that's a very important point when you develop this designs that not every
Correct.
abnormal is fraud. So that's very fine line between because at the same another point you touch base upon is false positive
Correct.
like this acceptable abnormalities as well as fine balance of finding false like reducing false positive is very important to have a good customer experience, because if you keep flagging everything as a fraud and if the
We
customer is
will
not
lose.
able to process it, then it will like it's become a trust issue. Should I even go ahead with this institution or not, right, in finance
Yeah.
world.
True, yes,
Yeah.
yeah.
Okay.
See, and it requires continuous retraining and monitoring, because fraud detection systems degrade over time because both
Mm-hmm.
attackers and legitimate user behavior evolve. So models must continuously adapt to avoid the becoming obsolete. Because
Mm-hmm.
as you said, false positives hurt customer trust. Because
Exactly.
yeah, like blocking a legitimate transaction is the very bad experience for the users, and
Yeah.
customer will get frustrated if card declines at checkout, and it will be revenue loss because
Mm-hmm.
we lost business, we lost transactions,
Mm-hmm.
and users may switch providers if it declines happen often. So fraud detection is especially challenging because we are optimizing for rare events, and also these are costly because blocking
Yeah.
legitimate transaction frustrates users and hurts trust.
Yeah,
Yeah.
and it increases hardship for them, right? Like another example I can think of, you are on the international travel, you are making a
Mm.
legit purchase, but because of the currency conversion, like if you are visiting Europe or from rest of the world or anything, the like conversion is very high and then the amount is big, and then it's
Yeah.
not usually because from another country then you have to make calls, figure it out, so that and on your holidays,
Yeah.
so that kind of experience you definitely don't want to give to your customer, because then you
Correct.
lose trust, as you said, you will lose revenue.
Correct.
That news, and with now social media and everything, one small mistake
Yeah.
has cascading effect, so you don't lose one customer, you will lose a pool of customers
Correct.
with that. So
Yes.
okay,
Yeah.
very good. Thank you. Thank you for giving that background. So I want to shift little bit into core technical thinking we need to develop this AI tools, operations, or system in finance world. So
Yeah.
how anomaly detection fundamentally different from the traditional rule for this specific finance industry
Yeah.
based on your experience?
Okay, so traditional rule-based systems rely on predefined logic, like we discussed, like thresholds or known fraud patterns, while
Mm-hmm.
anomaly detection focuses on identifying the deviations from normal behavior. So rules are explicit and static, whereas anomaly detection is data driven and uses unsupervised or semi supervised learning to model what normal looks like and flag anything unusual. So the main difference between supervised and unsupervised learning is rule of if we take the rule-based systems, they're manually defined. They're based
Mm-hmm.
on known fraud patterns.
Mm-hmm.
And anomaly detection is often unsupervised. So there is no labeled fraud data needed, and also it learns baseline behavior from data automatically. And but it can also be semi-supervised, like train on normal data only. But it will be automatically learn from the data because for example if we put the rule flag transactions greater than $5,000, the anomaly model will say that this user usually I mean, if a user usually spends 50 to $100 and $2,000 is suspicious for the
Mm-hmm.
anomaly model. But
Mm-hmm.
for the rule, we will just give flag transactions greater than $5,000. So it don't know or detect these small fraction of frauds. And also the rules are like one size fits all logic, but
Mm-hmm.
anomaly detection builds user specific profiles, which is the main difference.
Yeah.
So the model learns patterns such as spending habits, time of activity, location, or device usage.
Mm-hmm.
$8,000, like you said, $8,000 transaction is normal for a frequent traveler, but it's suspicious for a low spend user. And
Mm-hmm.
also, rules are easy to understand and explain, but those are easy to bypass also. But
Mm-hmm.
anomaly detection is more flexible and adaptive, but it is harder to interpret, like why that is flagged. We need to provide very detailed information for that.
Mm-hmm. Mm-hmm.
Yeah, and also rules catch known patterns only, but anomaly detection can detect previously unseen behaviors also.
Mm-hmm.
So the main key difference is that rule-based systems rely on predefined logic and known fraud patterns, while
Mm-hmm.
anomaly detection models is what normal behavior looks like and flags the deviations.
Okay.
So the shift is from explicit human defined rules to data driven and personalized detection of the anomalies. Yeah.
Thank you. Thank you for the detailed answer. But more, I think, from your answer is for the data is the core for this new AI solutions, right? For
Yes.
the fraud detection than the traditional model. Because traditional, as you said, were static. If something happens, condition based. If this
Mm.
condition happens, do this condition. The takeaway from me is even to train your model that it is going to be successful, you need to have a huge pool of data to
Correct.
make sure that it works. So that's why, I mean, slowly I will move to architecture part later on too. But two things came up from your answer. One is having good source of data during your development is very important because you have that's the source for your automation to learn from to derive pattern and then learn from those pattern and then find the abnormalities for that particular customized scenario, right? Because now
Correct.
every
Yeah.
scenario is different.
Different.
My
Yeah.
account is different, your account is different, third person's
Yeah.
account different, our
Yeah.
habits are different, our
Correct.
seasonal changes are different. So it
Yeah.
becomes very niche per se for that particular scenario. So
Correct.
that's why the data is very important. The large pool of data is, I think, required when you build this vision. And second part, you slightly touch based upon the trust, like
Yeah.
and look, rather than trust, the explainability of your solution, because
Correct.
now it's not that simple. Like you show those rules based on
Yeah.
this has been detailed. So how? So you have to first, when you develop the solution, you need to understand what kind of patterns has been recognized, and you
Correct.
keep track of those patterns so that as a because at the end of the day we still own the decision making of this AI tools, right? We
Yeah.
cannot say that AI has decided it, I cannot explain it. So
Yeah.
that ownership of explainability is still with the companies.
Yes.
So it's very important. Uh,
That's company's responsibility. Yes. Yeah.
Correct. So
Yeah.
that's why it's very important that we understand the patterns recognized by these tools,
Yeah.
And then we justify the actions taken by it to our end customers later on, that based on this pattern we decide, the tool decided not to. So that's, and then trust, obviously, because trust has been fundamental part of our financial industry anyways. Like without trust you cannot succeed in, and more we automate these things, trust become more crucial,
Yeah.
both ways. Like you don't want to have false positive, at the same time you don't want to expose more risk to your customer by doing too much automation.
Correct.
Like
Yeah.
those 3 points I think I came up from your answer. So you mentioned in our earlier discussion and the profile I was looking at, you also have used generative AI approaches in your
Correct.
work.
Yeah.
So how these generative AI approaches are different, or it helps to improve fraud detection in this new era of AI than the traditional model?
Yeah, so generative models help by learning the underlying distribution of normal behavior rather than just separating fraud versus non-fraud. And this allows them to simulate the realistic patterns and detect the subtle deviations that discriminate models and rules might miss. And the this generative AI mainly useful in the sparse data scenarios because fraud labels are rare and delayed, and supervised models struggle due to limited positive examples.
Okay.
And these generative models learn from unlabeled data like the normal behavior, and
Mm-hmm.
also it helps to estimate likelihood of a transaction, like how probable is this under the normal behavior. So
Okay.
yeah, like example, the variational autoencoders. So these learn compressed representation of the normal patterns. And if it has low likelihood, that means it is anomaly. So generative models reduce the dependence on labeled fraud data by learning the structure of normal behavior directly from the abundant unlabeled data. Why this is very important is fraud is often not a single event, it's a sequence
Mm.
of actions. So for
Okay.
example, we need to log in. I mean, usually the fraudsters, what they will do is they will first log in, they will change the device, they will reset the password for that, then they will do the large transaction. So how
Mm.
these generative models helps her capture temporal and sequential dependencies. It will,
Okay.
the model checks the user journeys, not just individual transactions. So that
Mm-hmm.
is a main
Right.
difference between the static models and the generative AI. So the
Okay.
main techniques they usually generative AI used the recurring neural networks and transformers, which are popular sequence models. So these learn patterns like time gaps and what are the actions that person is doing in the order and the session behavior, etc. Like for example, a single transaction looks normal, but the
Mm.
sequence leading to it is highly unusual. Then we will make it as flagged. So they're especially powerful in modeling sequential behavior when anomalies arise from unusual patterns over
Mm-hmm.
time rather than isolated events. But
Okay.
this is still evolving, not fully mature in production everywhere, because the main challenges are interpretability and latency and integration, because
Mm-hmm.
it is very hard to explain why something is low probability, or why it is harder to plug into real-time decision pipelines. And
Okay.
because industry usually often used rules, and I mean they don't usually use the standalone things. So generative models are particularly useful in fraud detection because they learn the distribution of normal behavior directly from data. But they can I mean they can also model complex sequences of user activity,
Mm.
and making them effective for detecting coordinated anomalies. So, like I said, however, they are still evolving in production use mainly due to these challenges around interpretability. Yeah.
Okay. Okay, so they are more complex to understand. The decisions came out of it are more complex to interpret, and that's why we have not seen the much use of it in production right now, is what I see.
Yeah.
Um, cool. I mean, I think that's something I'm looking forward how generative AI is going to change finance world.
Yeah.
We'll
Mm.
see how future unfolds. Coming back to the same thing, probably we talked a little bit about it, but the balance between the false positive and decline the genuine transaction, right?
Yeah.
Like not decline, so declining the
Misinformation.
genuine fraud. Yes.
Yeah.
How
Yeah.
do you find the balance? Like what's critical when you what should one keep in mind while finding that perfect balance?
Yeah, so this is fundamentally a trade-off between the fraud risk and the customer experience. So, for example, if
Exactly.
the system is too strict, it generates false positives and blocks legitimate users and hurting their trust and revenue. And if
Mm-hmm.
it's too lenient, it allows fraud to pass through. So,
Mm.
in practice, systems use risk scoring with thresholds and often route the borderline cases to step up authentication or human review. So, for example, if it's a threshold tuning problem, the model outputs the risk score and we choose the cutoff threshold. So, it has two thresholds like lower threshold and higher threshold. Lower threshold means it will catch more fraud but increase
Mm.
the false positives. If it
Mm.
has high threshold means it will have fewer false positives, but we will miss more fraud.
Yes.
Yeah,
Mm.
and also the cost sensitive decision making because not all errors are equal. False
Mm.
positive will lost customer trust, revenue loss, and false negative directly impact the financial
Yes,
loss.
yes.
So $1
Absolutely.
fraud loss versus long-term customer churn. So yeah, so high value transaction will tolerates more friction and low value prioritize the smooth experience. So
Mm-hmm.
instead of a single decision, so what the model will do is it will divide into three types: low risk, high risk, and medium risk. If it is
Okay.
low risk, it will approve. If it
Mm.
will be high, if it is high risk, it will block. And if it is medium risk, it will put the step up authentication like OTP, biometric, or fingerprinting, finger usage, and email
Mm-hmm.
verification. So
Mm-hmm.
these will help reduce false positives without increasing the fraud. And also personalization sometimes improves the trade-off, like same threshold does not work same threshold does not work for all the users, because
Mm-hmm.
as we discussed earlier, frequent travel versus local user,
Mm-hmm.
or high spending versus low spending consumer. So
Mm-hmm.
so all these needs to be considered while building the model. And also there are some borderline cases where AI cannot identify. For those cases, human analysts were needed, and their decisions will help to retrain the models later. So because and so this is very essential about balancing fraud risk with customer experience. And also in practice, systems are very cost sensitive and use multi-stage decisioning, and low risk transactions, as I said, it will approve, and borderline cases go through step up authentication or human review. So systems are so these are the main things we need to consider while building the model. Yeah.
Okay. Perfect. Yeah, I like that. It's like you are categorizing them based on the impact of that risk, and then based on
Right.
that, the action needs to be taken based on that. But another takeaway from that is human intervention is also needed when it's very critical. You cannot just 100% rely on this system
Correct.
to make a
Yes.
decision. So
Correct.
it
Yes.
is not going to replace AI,
Mm.
humans,
Yes. Yes.
actually.
Yeah.
So moving a little more on the architecture side now,
Mm.
you talked about these things, right? What we have to keep in mind when building this uh, tools, AI tools, like defining rules, defining the risk, defining the thresholds or different criterias based for the rule decisions.
Yeah.
Um, what else we have to keep in mind while designing this fraud detection system today, or how has it been changed since the time, because you have seen that evolution from the traditional system to the new AI world? What you have seen has fundamentally changed in the architecture of
Yeah.
this.
So, the modern fraud detection system is a layered structure. So, it starts with data ingestion, then feature engineering, and then followed by real time models that generate risk scores and a decision engine that takes actions like approve, block, or step up authentication. So, it's not a single model, it's a pipeline that combines multiple models working together, because real time is very critical, because from fraud prevention, earlier it is fraud prevention. Now we have moved to fraud detection before it happened. So
Mm-hmm.
detecting fraud after the transaction is too late, and we need to act before authorization itself. And
Mm-hmm.
also the we have latency constraints also. Decisions must happen in milliseconds, and impact but it will impact very huge. And also the main streaming features we use in finance models are velocity. Example like 5 transactions in 1 minute, and device
Mm-hmm.
signals, location changes. And also we need to review the architecture implications, like what event driven systems we need to use, or what online inference APIs we need to use, etc. So real time capacity is critical, because the goal is not just to detect fraud, but to prevent it happen at the moment of the transaction. And also we have different models at different stages.
Mm-hmm.
First is the pre-filter. So we need to first block, so example like we need to block some known bad IPs or devices, and also filters obvious fraud early. And the second one is we need to check the real-time machine learning models, like we need to use the gradient boosting deep learning techniques, and to for the features like user behavior, transaction context, etc. And also we need to use different specialized models such as fingerprinting models, graph based models, and sequence models. And then we will send all the data to the decision engine, where it will be giving the results based on model scores, rules, and business logic. So the output can be like we discussed earlier, it can be approve or decline or any step up authentication. And
Mm-hmm.
later the post processing works. It will batch the models for detecting long term fraud patterns, retraining, and some it will go to analyst review support. So this is all the layered and sequence of actions for a model to be considered at the architecture level,
Mm-hmm.
because a central decision engine that combines these signals to take actions, and then do the authentication and approve the transaction. So these are the main things we need to consider at the architecture level.
It's more or less like a manufacturing industry that step one, step two, step three, step four, and you use different tools at each step. Like when it introduced, what are the first, like what are the filter criteria that this on face looks
Yeah.
incorrect data, so do that, remove them, then go as you go further with additional attributes, do more analysis, and then everything once you look around at, then you categorize them into particular bucket, and then you take a decision based on the rule, whether human interaction, straightforward rejection, or straightforward approval, depending on that.
Correct. Yes.
But all these things have to happen in fractions of second. That's the difference between things. Like you don't have time, even
Yeah.
though there are multiple layers, it has
Mm.
to work at the speed of light, probably, that all these things. So that's why that architecture has to be think through thoroughly before you design these solutions, because a lot of things go behind the scene, though it looks very seamless, that
Yeah.
like you pay by Apple Cash in fraction of second, money is transfer across uh, countries, like from
Yes.
US to India, India to US, across, you send money in fraction of second, but all these decisions happens in the back end, and
Yes.
that is what is exactly you are working on right now. So thank you for giving that insight. So
Okay.
the chat, well, organically, the next question comes in my mind is the data challenges the company's organization must be facing with this challenge. So, what are the biggest data challenges you have seen in this fraud detection faced by the companies?
Yeah, so I think one of the biggest things organizations underestimate is how critical data quality really is. A lot of teams focus heavily on models, but if
Mm,
the underlying data is incomplete or inconsistent or noisy, even the best models won't perform well. For example, missing transaction attributes or inconsistent user identifiers or delayed data can significantly impact the detection accuracy. So,
mm-hmm,
before even thinking about advanced AI, getting clean and reliable data pipelines in place is very essential.
mm,
And the second major challenge is the context enrichment.
mm,
A single transaction by itself doesn't tell you much. We need to understand it in the context of user behavior, device information, location patterns, and historical activity.
mm-hmm,
For instance, a high value transaction might look suspicious in isolation, but if we know the user has a history of similar transactions or is traveling, it changes the interpretation completely.
mm,
So, enriching data with contextual signals is key to reducing the false positive.
mm-hmm,
And the third challenge is real time data ingestion and processing. Fraud detection often requires decisions, like you said, they need decisions in milliseconds, which means data needs to be collected, processed, and analyzed in real time
mm,
within milliseconds.
mm,
This is not trivial, like streamlining pipelines can break, latency can increase, and
mm,
even small delays can lead to missed fraud or poor user experience. So,
exactly.
overall, I did say the biggest underestimated challenges are not just about building better models, but about ensuring high quality data, enriching it with the right context, and making it available in the real time for the decision making. And a common mistake is over investing in model complexity while ignoring these data pipelines.
Mm-hmm.
So, in practice, most failures in fraud systems comes from data issues, not model issues actually.
I think you are the second or third person on the finance topic on my podcast.
Okay.
And I'm from the finance, so
Mhm.
I like finance is my um, bread and butter, and it's very close to my heart. And I think that's the pattern I have heard from everybody. Like everybody wants to do great things in AI in finance industry, but they don't understand how critical it is to have that clean data during building this model. Because as
Mhm.
correctly said,
That's the
you
basic, yeah, that's the
that's your
basic.
learning, like that's what you're feeding it to you. If you feed
Correct.
wrong food, it cannot give the right output. You
Yes.
have to ensure the quality of your data is very good, and it's enough
Yes.
data for it to train into. I have personally seen these two challenges. One is we try with very happy scenario, limited sample data, everything works fine in demos, everything like okay, checkbox, 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 everything works. But when you bring the actual data, production data, because we haven't thought through of that edge scenario, or probably that entirely different, like it's a normal routine, but we just keep focusing on happy scenario, we miss a big chunk of actual production scenarios, which leads to the, as you correctly said, even if your model is great, you cannot
Yeah,
blame your model because it never was trained on that scenario, so it cannot
yeah,
detect those anomalies kind of things. So
yeah,
very
that's
critical, and I agree with that, that every organization needs to keep that in mind, that having a good data source, clean data source, and enough data source is very important to have the great successful tool, especially in finance, because everything is very sensitive,
yeah,
either it as the cost of a user experience
yeah,
or at the cost of money, because you
money.
will lose money
Yeah,
if this fraud keeps happening.
yeah,
Good,
that's true. Yeah.
thank you. So moving further on the same architecture term, how do you move from detecting anomalies to actually making decisions in real time with these tools?
Okay, so detecting anomalies is only the first step. Turning that into a business decision requires a decision system. Typically, models output a risk score, which is then fed into the decision engine that applies the thresholds and business rules and context to those actions like approve, block, or trigger step up authentication. So the system also balances automation with human review for uncertain cases like we
Hmm.
discussed earlier. So the model outputs the risk scoring, and model don't say fraud or not fraud. They just output with a score, probability of fraud,
Hmm.
which is also known as anomaly score. Example, it will be like 0.8, 0.5, it will show in the score. So raw
Okay,
score is not
interesting.
actionable, and it needs interpretation. Like
Hmm.
for example, we have risk, if usually there are three risk scores. If it is 0 to 0.3, it is low, then it will up the action will be approved. If it is medium, it is 0.3 to 0.7, then the action will be step up authentication like fingerprinting or
Hmm.
OTP. And if it is high, which is from 0.7 to 1.0, the action will be block. But these thresholds are tuned using the business metrics, not like fixed continuously, and also not fixed, and we need to continuously adjust these scores actually.
Yes.
So this is where the machine learning meets the business logic. And the main responsibilities are it needs to review model scores, rules, context, and then apply the business policies and also regulatory constraints. So the same score will be sometimes different action depends upon transaction amount, user is he is a VIP or a new user. So they
Hmm.
we need to review a lot of things while taking the decision. And also
Okay.
we don't automate everything. Suppose if it is fully automated, then low risk will always go to approve and high risk will always go to block. We need to have human in the loop. So all the medium risk and ambiguous cases will be going to will
Review
needs to be go
process.
to human, because why human review matters is it handles edge cases, because humans handles edge cases and provides labeled data for retraining and also
Hmm.
improve system over time. So but the thing is, more human review will be higher cost and better accuracy, and more
Hmm.
automation is scalable but riskier. So we need to think about all those things. And also the step up authentication also, which is major middle layer, like OTP, biometric verifications, and email or
Hmm.
SMS confirmation, because
Hmm.
these are very powerful, which helps in reduce false positives and keeps good users while stopping the fraud. And
Hmm.
and outcomes also and even the outcomes always feedback again to the system as a confirmed fraud or user disputes or sometimes analysts decisions. So
Mm-hmm.
all these can be used later for model retraining and threshold tuning, and we can update the rules also. So moving from detection to decision involves translating model outputs into actionable outcomes through this decision system. And this allows the system to balance automation with accuracy, while feedback from outcomes also continuously improves the model and the decision policies.
Yeah. Uh,
Yeah.
I think my what I'm hearing from you is that context is very important with these tools now,
Yes.
because earlier that was not the case. Like everybody is treated same.
Yeah.
Now, with more advanced, you are getting personalized personally catered services in every aspect of it, and that's why it becomes unique for each scenario. You cannot just apply random rules. So context and learn, keep feeding that context, because context keep changing for even the same individual. What
Correct.
I was doing 4 years back, it cannot be the
Mhm.
same as of
Mm.
today, right? So that
Yeah.
continuous feeding, even for that individual customer, is very important to
Yeah.
keep evolving on our journey to deliver better services. And
Yeah.
then I slowly want to move in this area, like trust, the explainability and regulation, because you touch upon that. Not everything, even if we try to interpret, will be acceptable by regulation, right? So for regulation purpose, like two-step authentication, now
Mm.
many places, like almost everywhere, you have to have two-step authentication nowadays. Like
Yeah. Now
very
it's
rarely you, even Gmail, you need
yeah.
two-step
Now it's
authentication. Like
similar.
before we
Yeah.
started our podcast
We
going
don't
into
have
uh,
anything here. Yeah.
exactly, that took me 30 seconds because my two-step authentication didn't work to go
Yeah.
live on
Yeah.
YouTube. So
True.
even every normal, which used to be very normal, like leisure activities, also now getting into this two-step authentication. So data has become so sensitive because it can get exposed to for the risk, right? Because everything is
Yeah.
available. So
Yeah.
abundance is causing risk, and risk needs more attention and then more context to detect this. So it's like a cycle kind
Yeah.
of things. So slowly going into that trust model, how do you balance performance with explainability in this regulated environment? Because finance is heavily regulated industry, right?
Yeah.
So
So,
thoughts.
in finance, explainability is very critical because decisions directly impact the customers and also subject to regulatory scrutiny. Because
Mm-hmm.
we can't rely on black box outputs, we need to justify why a particular transaction was flagged or declined.
Mm-hmm.
So this creates the trade-off where slightly simpler or more interpretable models are often preferred, or complex models are augmented with explanation techniques. Because for every company or for every industry, we have the regulatory and compliance requirements, and
Mm-hmm.
financial systems must comply with these regulations like fair lending and anti-discrimination. So we must
Yes,
answer
very
why
important.
was yeah so we must answer why was this particular transaction declined? Was this decision biased?
Mm-hmm.
So, for example, if a credit card is blocked, regulators may require a clear reason. In regulated domains, every automated decision must be auditable and explainable.
Yeah.
And also users don't trust, don't accept your transaction was declined by an, if we say if your transaction was declined by an algorithm, they expect
So agree.
why we have blocked or rejected. Is it
Yeah.
because of unusual location or high transaction amount compared to your history? So
Mm-hmm.
we need to give better explanation so that it will be less frustration and higher
Mm-hmm.
trust will be there. And
Absolutely.
also data scientists and analysts needs to understand why the model made a mistake and which features are driving decisions. So without explainability, it is very hard to fix these false positives and hard to improve the model also. So
Mm,
we have interpretable models such as decision trees and logistic regression, which are very easy to explain and transparent, but these may miss some complex patterns also. So that's why this is we can use the SHAP and LIME. These are the latest explainability techniques where it will have the feature attribution, which is the most common feature, most common techniques that we are using right now in AI, where it will show which features contributed most to a decision. For example, a transaction flagged because 40% unusual location, 30% new device, and 20% high amount. It will provide very detailed explanation. And
mm,
also, it will give the reason code such as convert model outputs into human readable explanations. And it will give why it was declined. Is it due to unusual spending pattern or suspicious device? So
mm,
finance mostly cares about these local explanations. And also, the decision engine often includes the model score and also all the audit logs, complaints checks, and we will have the customer support also. So, explainability is very critical in finance systems because decisions must be transparent to regulators, customers, and internal teams also. It's not enough for a model to be accurate, it must also justify its decisions. So,
true.
in practice, teams often use powerful models like gradient boosting, but pair them with explanation techniques such as this feature attribution, like SHAP and LIME. This will allow the system to provide more clear, human understandable explanations while still maintaining high predictive performance. So these are the main, this is the main use of explainability. And I want to give one example here.
Sure.
So if we take a suspicious credit card transaction scenario, the
Mm-hmm.
amount is $2,500 and location is New York, and device is new, and time is 2 a.m. So these are all the features that SHAP will provide if we flag a credit transaction as if we flagged it as an fraud. So it will share very detailed explanation why it was flagged it as, because in user history usually he or she spends 50 to $200, mostly transacts in California and use same mobile
Mm,
always. But suddenly, if the transaction is at New York and 2,500 and device is new and time is 2 a.m., so all this transaction will be clearly provided in the
mm.
explainability. Yeah.
Yeah, and circling back to your earlier comment, we still have human in loop also because in certain cases that
Yeah.
person is genuinely doing that,
Yeah.
and that's why based on your categorization of risk with that context
Yeah.
makes it different. You have explanation on top of that. You have this categorization context, and then decision on top of that. So you have that complete end-to-end picture that
Mm.
when if the concerns are raised by customer, you have that whole history of justification to give it to maybe auditors, maybe authority or regulatory or
Yeah.
actual customer who might be needing.
Yeah.
Okay, cool. Um, I want to, we are almost at time, but I want to give have a couple of questions on the future landscape. Like, I want to get your personalized perspective. What do you see, like how fraud detection will, like what will be fundamentally different in near future? I don't ask these days 3 to 5 years because every day is new. Every day something new comes in AI world. So probably what will be the next big shift in fraud detection per you based on your experience?
Yeah, so we are moving towards real time and adaptive fraud systems that continuously learn from data and user behavior. And the shift is from reactive detection, which is after fraud occurs, to proactive prevention, where systems anticipate risk and intervene instantly during the transactions. And also, we are moving from batch processing to streamlining the intelligence and also making the decisions in milliseconds. And now the and why fraud is also stopped before it happens, not after. And we are also continuously updating the systems based on all these knowledge of having the past historical data and all.
Absolutely.
And also so many behavioral and centric models also, and
Mm-hmm.
generative AI and stimulation. These simulation fraud scenarios. So yeah, all these are. These are all not replacing the humans, but we are augmenting them, like human and AI collaboration, augmented
Absolutely.
intelligence. So yeah.
And it's needed because the speed of AI cannot be matched with human because there are these pattern recognition, making
Mhm.
decision quickly,
Yeah.
working 24 by 7 probably. That's another thing because we humans need rates. So there
Mm.
are benefits of AI, but we need to find what exactly we have to get benefit from these tools.
Correct.
And
Yeah.
just ha being against it is also not good, and being totally dependent on it is
Depend
also
on
not good. So
is
you have
not
to
good. Yeah, we need
find
to
a
keep training and we need to continuously monitoring. Otherwise,
yeah,
the system will get biased and yeah.
absolutely. Yeah. What one thing you will tell organization to focus when they are building this effective AI system in finance?
Yeah, like we discussed earlier, focus on data quality and system design, not
Yeah.
just the models. And in many real world systems, improving data pipelines and feature engineering and decision infrastructure often delivers more impact than marginal improvements in model accuracy. So, yeah, that's the one thing I want to.
In nutshell, focus more on architecture during build rather than later to
Yeah.
fancy features into tools. Okay,
Yeah,
perfect.
because a 1% model improvement may matter less than better decision logic. So,
True.
yeah,
Absolutely. I totally agree with you. Thank you so much, Sowjanya. It was so fun talking to you. Based on this conversation, one thing is clear, AI in finance is not just about having better model, but it's about building system that can detect, decide, and act while maintaining that transparency, respect, trust into the system at every step of the process. So thank
mm.
you so much. It was so candid to talk to you. But
Thanks a
I
lot. Yeah, thanks a lot, Sheetal, for giving me this opportunity, because a lot of people were learning lot of things from your podcast videos. So it
uh,
would be great and giving. Thanks for giving me the opportunity.
pleasure is mine. Thank you. Thank you for
Thank
being
you.
here. But before I let you go, I have rapid fire questions for you.
Okay.
Few questions just to make it a little funnier,
Mm.
because we talk about a lot of technical stuff. I mean, it's still on the same topic, just making it a little um, funnier at the end.
Yeah, yeah, sure.
Okay, ready?
Yes, ready.
Okay,
Yeah.
and first few questions are one word. There is last question which is like one sentence, but I will let you know. So first
Okay.
question is one word that best describes the future of AI in finance.
Mm.
It's rapid fire. You have to be quick.
Uh, Fraud detection,
Okay. Fraud prevention or customer experience, which is harder to optimize.
customer experience.
I agree. One red flag that instantly makes you question a data set.
Pardon?
One red flag that
Okay.
instantly makes you question a data set. Like
Question. I mean,
Like what is in the data make questions you like, is it really good data, or like this is not going to work? Like looking at just data, you can figure it out that this data is not good enough for my solution. Is there any
um,
like peculiar things you look into data?
no.
Okay,
Yeah.
no worries. We'll bypass that. Rule-based systems or AI-driven detection. What still deserves more credit?
AI-driven detection. Yeah.
What's more dangerous in fraud detection? False positive or missed fraud?
Missed fraud.
Absolutely, always. One
Mm.
skill every AI engineer in finance should develop.
Um, I mean, the architecture, designing architecture, architecting the model, actually.
Okay, got it. Now, this one is you can use one sentence. In one sentence, what does successful AI in finance really look like?
Less false positives and um, less false alarms also.
Perfect. Thank you so much. Thank you for being so candid with us and
Thank you.
being part of my rapid fire round.
Mm.
It was pleasure talking to you, Sajanya, and
Okay.
we'll stay in touch. Have
Yeah,
a good
sure.
evening.
You too. Thank you. Bye, Sheetal. Thank you.
Bye bye. Thank you everyone for who joined today for our episode. You can watch it